Okay, so today we are talking about NUbank. Basically, I think NUbank is not a company that is unfamiliar to us. I think most of us should be fairly familiar with NUbank. So, welcome back. Today is officially day 5 of covering 10 companies in 10 days, and we are basically at the halfway mark, right? And so I thought, this is actually quite apt that today with SoFi, we started off talking about SoFi's options and how SoFi has just hit $26 a share. This is actually a fintech that people like to compare against SoFi and use it as somewhat of a benchmark of what SoFi can eventually become. So, now, for the skeptics, some of them would look at NUbank and say that, why buy SoFi when you can buy a company like NUbank? And I think for people who are extremely bullish, they say that, look, this is what SoFi can become eventually. Now, I think the truth is somewhere in between. Both businesses do have their structural advantages and disadvantages due to the way that they run their business, due to their geographies, and basically the focus of both of these businesses. So I really do want to start us off by listening to this clip from the NUbank podcast.
Technology companies in the world created over the past 20, 30 years. A lot of them, the big majority of them have come out of the US. Mm-hmm. They have not come out of the global south, they have come out of the US. And why is that? It's because they have been trying to solve problems that are global in nature. Mm-hmm.
Are you able to hear?
Obviously, the US has a lot of the capabilities and technology and talent to be able to reinvent, to take people to Mars or reinvent the rockets. But the leading technology company in financial services is unlikely to come out of the US because the initial problem wasn't apparent necessarily there. So that was not necessarily the problem that the entrepreneur wanted to solve. But when you go to Brazil, the pain there was 10x bigger. Mm-hmm. And so in countries like Brazil, if you have a conjunction of factors from a consumer pain that is big, but also a regulator that enables that innovation, and you have capital and you have entrepreneurship and you have access to data, if all those stars align, then you might actually build one of the leading technology companies in that space. And that's why NUbank today globally is one of the leading digital banks in the Western world that came out of the global south. Yeah. So I think it depends on the industry and the consumer pains. It is possible that the future leading healthcare company in the world might come out of the global south because the pain felt in the global south on healthcare is gigantic, is much larger than in a lot of developed economies. And what AI has done is democratizing access to that knowledge, right? Expertise becomes a little bit of democratized. So
if you listen to what he said, I think he gave a very interesting perspective. I think he feels that, the possibility is that the leading financial services company on a global scale is unlikely to come out from the US. I mean, the overall thesis behind this statement is that he feels that the pain point for financial services in the global south, in South America, is much bigger than in the US. Now, we know in the US, Robinhood is definitely gunning for that same title of being, the leading global financial services company. But I think apart from that, I think his whole perspective over here is that because we are solving a bigger problem in terms of the pain points that are being felt by people in this in South America, people that are being felt in, I think, in Asia, in Africa, and wherever else they're planning to expand into. And so what he really mentions here is he's really talking about the fundamentals of the business, right? Which is to solve problems. That is what business do essentially. They solve problems. And I mean, it is a matter of fact that, for people living in the US and other developed countries, I mean, I would think Singapore is included, that although legacy financial institutions are a pain in the ass, the fact of the matter is that even if there's no Robinhood, even if there is no SoFi, these legacy financial institutions, they work. They are annoying, they are a pain in the ass, but the pain point of having a bad financial of having a legacy financial institution isn't as bad as totally being an unbanked population. So because of that, I think what he's saying, and I'm inferring from what he's saying, is that because the focus of the top engineers and top tech executives in all of these developed nations, like the US, are going towards solving the quote-unquote bigger problems, right? Things like AI, things like launching rockets into space and things like that. And because of that, that is where the focus and that is where the biggest breakthroughs from these developed economies is going to come from. But in terms of financial services, and he actually also mentions healthcare, the companies that are tackling these problems, that are solving the biggest pain points for the most amount of people, come a lot of these underdeveloped nations. And he mentions that it is actually AI that is democratizing this knowledge, that is enabling them to solve these problems at a rate that is perhaps faster than some of these other developed economies. I think the example that I think of is that when we talk about Robinhood, I mean, Robinhood is exciting. They're really at the cutting edge of finance. They have launched their Robinhood Legends. They're bringing tokenization into their platform, and they're trying to push for this move towards tokenization in the financial ecosystem. And they're really, like I said, at the cutting edge of financial services. But to David's point, these are not things that solve the problem for the entire population. Like I think majority of us here might understand tokenization, might use Robinhood Legends and things like that. But for the large majority of the population, at least I'm speaking from my experience in Singapore, I think even though we are a developed nation, not many people understand how to invest, what is investing. A lot of them still see it as gambling. So while Robinhood is at the cutting edge, they are not solving the biggest pain point, and that is his basic argument of why a leading global financial company could possibly come out from the global south. And I think this is a philosophical argument to be had. You know, what does it mean to be a leading global financial services company? And to be honest, you know, I think business is an infinite game, right? There's basically no ending point. There's no, oh, I have won. Right, you play the game just to play the game, and it's very hard to decide what do you mean by the leading global financial services company, because a financial services company like Robinhood might not serve as many customers as a NUbank, but because the customers that they serve have, you know, a larger access to spend, so because of that, the assets under management for a company like Robinhood might be a lot bigger than a company like NUbank. Right. On the other hand, you might not serve people with as much assets under management, but because you have more people on your platform, that some people may perceive that as being the leading financial services institute. And so this is a philosophical debate that there's no answer to. And at the end of the day, I don't think that there is an ending point. And I don't think that is David's point when he's talking about this, but I think he's just talking about the fact that one of the leading financial services companies should be coming out from Latin America, and he's positioning NUbank to be that company. Okay, going back to the slides, you can really see that, you know, NUbank is really one of the companies that are really positioning themselves in a way to be that financial services, so the leading global financial services company. And NUbank was basically founded by David Velez back in 2013, I believe. And yeah, so the reason why he started NUbank in the first place is because he actually shared this story. You know, he had this experience where he had to wait very long in line to basically apply for a bank account to be open, and then after that there were fees and things like that. So it was a very unpleasant experience, and so because of that, this was really a pain point that he felt strongly about, and that is why he wants to solve the problem for Brazilians today, and then to expand it out now to countries like Mexico. And right, so you can see today they have over 114 million members in Mexico, in Colombia, and in Brazil, and they actually have this entire flywheel. If you think about SoFi's business model with their flywheel, I think NUbank's flywheel is way more impressive. And I think you can see, I just want to point out that you can see the dark purple portion. There's new travel, new shopping, and I think, was this, or new sell, right? This is their mobile plan. And so they go beyond just financial services. They really get people into their flywheel. And I think you can see a pro and cons of that. You can see it works for their business model because they're trying to reach the most people possible. But at the same time, because of this large diversification of their business, you can actually see their margins are perhaps not as high compared to some other companies later on. So NUbank has basically categorized their business into 5 financial segments, and the first one being credit and debit cards, which is how they started the business to begin with. And I think it goes beyond that. It's about creating an entire payment ecosystem and entire payment solutions. And they include things like the QR code-based payments, as well as Pix instant payment solutions, which was launched by the Central Bank of Brazil back in 2020. So they work with the government to basically power that, and it enables free real-time transfers 24/7. So basically NUbank has integrated this into part of their ecosystem, and right now over 80% of the Brazilian population actually use Pix as a payment method. And so therefore this is how NUbank has actually used all of these different innovative ways to actually reach out to a larger audience. So additionally, on top of all of these instant payment solutions, I mean, they do also offer the typical wire transfers. And I think in general, if you look at all of their solutions across all of the different segments of their business, they're just aiming to simplify a certain pain point for the customers. And in this case, it is point to money transfers. So on top of all of this, of course, they have their basic saving accounts, business accounts, as well as their investment platforms. And then like other banks, they also offer both secured and unsecured loans with limits that grow over time so that, the users are able to build their credit history with NUbank. And I think this just makes them an even stickier product because you think about someone who perhaps apply for their first loan with NUbank and then you build up your credit score with that. And because of that, and because NUbank already has the data of how you have actually made payments in your previous loans, they actually have the data on your financial behavior, your income, your spending habits, and things like that. Because of this, they are likely going to be able to give you a better loan, a bigger loan, compared to some other banks who basically have no prior relationship with you. So because of this makes their entire product very sticky. And I think that and I think this really shows how they have managed to achieve such a high level of penetration within the Brazilian market. I believe over 60% of the Brazilian adult population is using NUbank as their day-to-day bank, and I think they have found a model that really works in Brazil because of yeah. And whether they have found a model that really works in these Latin American countries, in Brazil, in Mexico, in Colombia. And I think the challenge is whether or not they can take this model and basically implement it in somewhere in a more developed nation like the US and in Europe and things like that, and whether or not they still actually see the same kind of cost advantages that they're seeing in Brazil and in Mexico and Colombia. If they bring their business overseas, might have to tweak certain things to adapt to a particular demographic. But I think by and large, you can see that this is a business model that really works. Now, on top of all of this, at the end, they also provide protection through things like life insurance, home insurance, and I think they do insurance for mobile devices as well. So I think NUbank has, very explicitly laid out how is it that they managed to grow their business so fast. This is actually taken from their 10K and they have an extremely low customer acquisition cost. I don't know if you can actually see this because this is so small. It says we have an especially low customer acquisition cost, okay? Our average customer acquisition cost is $7 per customer. Now, if you have remembered in my previous SoFi video, I said SoFi is doing fantastic compared to other banks because their customer acquisition cost is between $280 to $320. $280 to $320. So which means for every 40 customers that NUbank actually advertise to, for every 40 customers that NUbank acquires, SoFi acquires one customer, right? So that is basically the difference. And this is where I say that if they actually bring this model over to other developed nations, because I think there were certain rumors of them possibly going into the US, whether or not they can still put up these kind of unit economics is really still remains to be seen. And I think this is something that they may need to tweak their business model and adjust along the way if they plan to move into all these more developed demographics. So I think at the end of the day, you can actually see that, it is this low cost structure is really built into the entire business model. And a large reason behind this is because of how good their products are. You can see this second line that I highlighted in yellow over here. Like I said, it's very small. Let me read it out for you. It says that we believe our organic customer acquisition model is among the best in class model, as evidenced by the fact that we have acquired approximately 80% of our customers organically on average per year since inception. So that means since 2013, every single year, the total number of customers that come onto their platform, 80% of these customers basically found out about them through organic word of mouth marketing, which really speaks to how differentiated and how good their products are compared to some of the legacy offerings in Latin America. Now, however, despite all of these things that are working for NUbank, we need to talk about why NUbank has actually stayed stagnant pretty much for the entire year. You can see over here, they basically stayed stagnant in between there were certain times where they fell below this red line, but they pretty much stayed stagnant from January all the way until today, between $12.20 and probably $13.94. So for those of you thinking that today, when NUbank is trading in the $14 range, you perhaps might have missed something. I don't think you have missed anything yet. Basically, you just broke over one of the first resistance line over here. And basically, to me, this is really just the start if they can maintain over that level. Right, but I think we have to understand what caused this, stagnation in their stock price, and I think a large bulk of it is down to the interest rates that are being set by the Central Bank of Brazil. That has been a significant factor in affecting their operations, affecting their financial performance in 2025. Now, as of August of 2025, I believe they're at 15% or 14.75% because they hiked 50 basis points in May. And then in July, I believe they held rates constant because of Donald Trump, which I will address later on. So I think some of the projections for the Brazilian rates indicate that, they could stay at this 15% range for the most of 2025 and then gradually declining down to around 10% by 2028, which means over the next 3 years. Now, with cuts unlikely before 2026 due to uncertainties around inflation and things like that. Now, initially, when I looked at this, I was a little bit concerned because, 10% interest rates still seem pretty high. I mean, in Singapore, I'm generally used to around 1.5, even sometimes close to 0.5 interest rates. But generally, in Singapore, generally accepted 1.5 to 2, right? But there have been years where it's lower than that. And I think it's the same in the US. There are certain years where interest rates were negative. But if you look at this chart over here, you can see over the last 10 years, interest rates being around the 8 to 10% range is actually fairly normal. The only time where it went down to 2% was during the pandemic. So I think if you understand it in context of Latin America, 10% interest rate is, more or less in the average ballpark. So because of that, I think the way I look at this, the way I look at NUbank, really, is that, this is the same story that we have been through with SoFi before. High interest rates basically scare investors, but if the company can execute and get to the other side of this, then they will do just fine, which I think NUbank has proven time and time again that they are able to do so. You see, I think apart from this, I think they also experience a lot of volatility due to the conflicts between US and Brazil. I think this happened sometime in July or August. Basically, Donald Trump threatened to impose, I think, 50% tariffs on Brazil due to some disagreement he has with the Brazilian president. I'm not too, I didn't read too much into this, but basically, he was unhappy with how PIX is actually unfairly, ostracizing American payment companies and things like that. So when the US launched this investigation into PIX, claiming that it discriminates against American payments company, and with NUbank integrating it into part of their ecosystem, which I was talking about earlier, I think because of that, people start to have uncertainty over whether or not there's going to be a slowdown in NUbank's revenue, and whether or not the impact of the tariffs will cause the Brazilian economy to slow down even further, right? And I think at the end of the day, because of all these uncertainties, because of all these fears, NUbank's price basically has traded within the range for much of this year. Like I was mentioning earlier, in response to this, I mean, of course, Brazil has responded by defending their own payment system, and then they basically kept rates constant to basically protect themselves against the potential tariffs, right? Because if tariffs are coming and they are likely going to slow down the Brazilian economy, then you do not want to raise rates to such an extreme level that you yourself start to slow down the economy as well. And then if Donald Trump imposes his 50% tariffs, then Brazil may really end up into a recession. And I think that's the fear around NUbank as well. It's more of a macro fear than anything to do with the business. But as you remember in our checklist, we like to invest in businesses that can actually survive all of these downturns in the economy. And if you hear David Velez talk, you know that he is someone that really understands the market that NUbank is operating in. So to me personally, I'm not too worried about it, because I think apart from looking at some of these macro data, when you are investing, you are basically just giving money to the CEO, trusting him to allocate the capital to grow that particular business. And I think David Velez and the team in NUbank has proven time and time again over the last 10 years or so that they're really good capital allocators, and they really know what they're doing. I think from here, moving on, we really want to focus on what NUbank has announced during their earnings. And so if you take a look over here, customers have grown at a very impressive rate. They have grown customers at a 31% CAGR between 2021 and 2025, right? And you imagine that they're keeping up this 31% CAGR, although their customer counts are in the tens and even now hundreds of millions. Now, it's not just customers for the sake of customers. You can also see the light purple dotted line in the middle. This basically represents the percentage of customers that are active on their platform. And this has increased from 72% back in 2021 to 83% in the last 2 years. So you can see that people are just not just downloading the app one time and using it one time, but they're actually using it on a fairly consistent basis. Revenues is up 85% over the last 4 years as well, from $336 million to $3.66 billion, right? Gross profit is up 78% CAGR. You can see the gross profit, if I'm not wrong, is around the 40% range, which is, I guess, slightly lower. If you consider things like, SoFi's lending is over nearly 60% contribution profit, similar to financial services over 50%. If you consider that, then you start to see, okay, maybe their gross profit margin is slightly lower than some of their competitors. You have to understand they are in Brazil. The demographics over there is different, and at the same time, they are using a slightly different strategy. Now, SoFi is going more towards the very explicit kind of marketing, like in your face, like SoFi Stadium. We pay a certain X amount of money to own the stadium, to own the naming rights to the stadium. When people come, they will start to know. Whereas in NUbank, they have different segments of their business, like new sell, new travel, and things like that. So I think because they have so many different moving parts, it is a bit harder to get the same kind of margin levels. Then at the same time, you can see net income has grown substantially over the last couple of years. They have turned profitable since 2023 and continued to grow at pace, right? And I think what really drives that, while apart from talking about their $7 customer acquisition cost, is their monthly average revenue per active customer. So they're not just counting customers that are downloading the app and then leaving it there on the phone. They're counting the monthly average revenue per active customer. So you can see this number has been fairly consistent in $11.40 back in Q1 of 2024 to $12.20. Now, I just want you to just remember this graph, because later I'm going to show you something else that shows you how impressive this is, right? But at the same time, the next graph, this is the cost to serve each active customer. So you pay 80 cents to serve a customer, 90 cents to serve a customer, and yet this customer generates you, $12.20. Yes, they focus on growth, especially in Mexico and Colombia, and they're not focusing on the margins right now. This is definitely true. Which is why you might see certain margin compressions, and because they are really in growth mode over there. I think they just got approval for the banking license in Mexico. I think this was back in May or June. So you can really see that they're growing over there as well. And because of that, it could be why they are sacrificing margin, because it's the same concept as SoFi. When you get newer customers on your platform, they do not spend as much. And I'm going to show you that exactly in the next slide. So you can see over here, this is the monthly average revenue per active customer by cohorts. So in year one, right, while spending 80 cents to service the customer, right, the customer basically spends around 80 cents per month. So you more or less, whatever you're spending on the customer, they're also spending on your account. So you basically break even, so to speak, on that customer in year one. But by year two, or by the end of year one, 12 months after they have been on your account, NUbank has basically shown us that a customer that has been with us for at least 1 year, basically 6x in terms of the amount of revenue they generate for the business in just 1 year. And you can see the final graph over the final bar over here after 96 months. After 96 months, that's like 8 years. After 8 years, the cohort end up spending around $27.30 per month, while the cost to serve the customer is 80 cents. And that is why you can see their net income increasing at such a fast pace, and why they are able to maintain such a strong gross profit despite having so many businesses out there, which is why I say despite their lower gross profit margin compared to companies like SoFi and things like that, I don't really penalize them for it, because you have to understand the business model, and like what Mr. Aston has told us as well, that because they are focusing on growing in other countries right now, like Mexico and Colombia, that also causes their margin to be slightly compressed. So you can see it's not just revenues. This was all driven by their total loan portfolio, which is growing, which is very healthy. Deposits are growing as well over the last 6 quarters, $24 billion just 1 year ago, and today it's $36.6 billion. And at the same time, you can see their net interest margin, risk-adjusted net interest margin. Okay, people were a little bit worried because it was coming down, and then finally we are getting an inflection point. Now, this is the first inflection point that we have seen, and we want to know that this will continue over the next couple of quarters as well. But you can see this is a company that is very well capitalized. This is a company that is not in danger of being bankrupt, even if the Brazilian economy does go into recession because of all these inflationary fears, because of all these fears of tariffs and things like that. You can see capital ratios, minimum is around 10.5%, and currently they are around 32%. Similar, and for liquidity ratio, they should have around 100%. And right now they're around 69%. Okay, so let me get into the valuation. Let me pull up my spreadsheet. On the first page, we are tracking their business metrics. These are the numbers for the total members as well as total active members at the bottom over here. So you can see, you can see that in Q2 of 2025. So total members on NUbank's platform, 123 million members, and out of which around 83%, which is 102.1 million members, are active on the platform. Right, so you can see people are really using their product. Average revenue reported over here. Cost to serve, I've actually plotted it out. So you can actually see this 80 cents has been consistent over the last couple of years, all the way from Q1 of 2021. They have been ranging between 70 to 90 cents of cost to serve every single quarter. So I think, to me, this is highly, highly impressive. And this is why it shows that their business is very, very scalable. And the only question that I have is whether or not these unit economics can be replicated in a more developed nation. What I want to bring your attention to are these graphs over here. First graph that you're seeing is basically showing you the total member count and then how fast their new members are being added. So you can see, on average, they have added between 4 to 6 million new members every single quarter consistently for the last 4 years. So I don't think there's anything to be complaining over there. And this orange line, this second graph, you can see basically the blue bars represent the total number of members on their platform. But the orange line that you are seeing over here represents the percentage of active members. And that has basically risen from 70% all the way up to over 80%. Currently, we are around 83%. Was it 83? I think 83%. And this 83%, they are able to maintain this number while growing their member count. And I think that is highly impressive. I think you would think that, perhaps as companies get more and more members onto the platform, they churn off members as well. But this actually shows you that the so-called churn rate is actually getting lesser and lesser because you're adding more members but still being able to maintain the percentage of active members on the platform. And so this graph over here is really one of my favorite graphs to understand NUbank. You can actually see, if I zoom in a little bit, this is the average revenue per NUbank customer versus the cost to serve. So you can see that in Q1 2021, this blue line is around slightly under $4, while the cost to serve is, like I said, between 70 to 80 cents. And over the last 4 years, this blue line has grown exponentially, while the cost to serve has basically remained the same. So you can see that's how they have gotten more and more profitable over the last 4 years. If we are talking about a financial services company, we don't use discounted cash flow. We end up having to use things like your price to earnings multiples, price to sales multiples, EV to EBITDA, things like that, right? As well as the PEG ratio. So basically over here, what you have is NUbank's revenue over the last couple of years. And then basically in this most latest quarter, I believe, let me just share my screen on Fiscal AI. So what you're seeing over here, like I was saying, is really the growth of NUbank's revenue as well as their net income. And basically what we are going to be doing is to use these numbers to project out their earnings per share. Now, if I were to compare them with their peers, let's go to ratios and then let's take a look. So you can see NUbank's PEG ratio is only 0.4 and their forward PE is 21 times. And I think, to me, this actually shows how undervalued this company is right now. Now, I just want to warn you that my PEG ratio segment in that valuation sheet isn't fully built out. So you just ignore the PEG ratio first for now. But basically what it does over here is that once you fill in all these earnings, you can actually see the trailing 12 months. On the trailing 12 months basis, I believe NUbank's earnings is around $5.8 billion, if I'm not mistaken. If I use last 12 months, total revenue is around $5.8 billion, right? They expect around a 20% year-over-year growth, and that is what I'm be using in my valuation as well. So let's go back to NUbank's valuation. Okay, so like I said, we are going to use 20% as our estimation for their 2025 revenue because that's what they showed us over there. And then let's say this growth slowly starts to re-accelerate in 2026, 2027 as rates starts to come down. And then basically I'm assuming that they will only slow down towards, I would say, in a sense, slow down towards the end of the decade. Actually, when I was looking at this, I'm wondering whether or not this is way too conservative for the very simple reason. Historically, they have never actually grown at 20-30%. Previously, they were growing at 100% year over year. And then last year, they did 48%. And this year was the first year that they are doing around 20%. If I'm being very honest, what I actually feel more comfortable with is to accelerate this back to the 30% range and then to see them go into the decade coming into maybe high 20s, low 30% range. Now, the reason for this, and I'm not just putting in these numbers for the sake of numbers, they achieved this growth just by reaching 60% of the Brazilian population. You have to consider the fact that now they're going into Mexico. Now they're going to Colombia. There have been rumors of them buying NUbank, I believe, in Argentina, which they left in 2019, and now they seem to be going back to compete against Mercado Pago. And I think with all of this put together, with the rates coming down to the average range in around 2028, then I don't think it's too far-fetched to say that they get back to, mid to low 30% year-over-year growth. From here, net income, 34%, and I think this basically stays more or less the same all the way through. Shares outstanding, I basically assume very little dilution because that's what they have shown over the last 2 years. Previously, there was more dilution, but after that, dilution has been pretty much kept in check. And from here, you get the EPS throughout the next couple of years. But so basically, I can choose whatever year I want. Let's say I want 2030. And then the PE ratio, that the forward PE ratio perhaps is 30, and your earnings per share is $1.73, which means that the price target based on the PE ratio in 2030 is $52.01. Now, in terms of the price to sales ratio, right now I'm using 7 times price to sales. Is that fair? Let me take a look. All right. Currently, they are trading at around 11 times. So I think they're trading at around 11 times price to sales. So I think by the time we get to 2030, I think 7-8 times there's not much difference. It's around there. I think 7 to 8 times price to sales, they will be a much bigger company by then. And I think from now to 2030, basically, there seems to be at the very least, nearly a triple from here, or nearly a 3x from here, 200%, nearly 200% profit. It depends on your assumption for the price to sales. If you put this to 8, I think you're getting there. Yeah, nearly 200%. But for me, how I end up getting this number, your PE ratio, average over here, plus your price to sales ratio. And then from here, you take a 10% margin of safety, and then that's how you get $39.47. Now, the reason why I have only chosen to give a 10% margin of safety, honestly, is because of the credit that I'm giving to the management. I think if this was some other management, I might be inclined to give a larger margin of safety because the business is in Latin America and it's not a market that I claim to have a lot of knowledge about. But because of the management, because of how well the management has executed in the past, I think a 10% margin of safety feels quite safe to me. And with that, that will get you around 175% return today minimally. And then if you look at it on a CAGR, that's around 27% CAGR from where we are today every single year for until 2030. Right now, because they are still in growth mode, it's actually quite hard to project out their margins, which is why I do believe that we can actually get higher than this if they really at least fully scale out their Mexico, Colombia, and Brazil operations. And then from there on, I think these 3 will act as a very solid foundation, and then they can just add on different countries. And because they already have this certain model that works, they know how to approach a certain demographic of people. They can basically more or less copy and paste the same system into various parts of the world. But this basically, the verdict over here is that NUbank is a high quality company. And I think where they are right now, especially with the high rate environment, is exactly where SoFi were maybe 12 to 18 months ago, right? And so I think as they come out from the other side of that, they're going to see similar growth. However, I think the only caveat over here is that NUbank is actually growing at a much faster pace than SoFi because of their unit economics based on where they are. And actually, if you see the reason for the most recent spike in their share price is due to their results in their earnings. And I think if they can continue putting up these numbers, you don't even need to wait for the interest rates to come down for their share price to continue to appreciate from here. Right. So if there's nothing else, I will see you tomorrow, and basically have a good night.